I mean, we've been talking about this for over a decade, right? Someday physical is going to start dominating, and then the price will go way up because of that. And then, that's playing out according to the script, except it took a lot longer than it should have. But what we're seeing in the physical market isn't just industrial demand. And demand is a very big deal. Solar panels and electric cars and power plants, they all need silver along with a lot of other critical minerals. But governments are getting into this now too. Russia, China, and India are buying a lot of metals, including silver. The U.S. Silver is an amazing story, and it's, for maybe the past 3 or 4 months, has been basically the most exciting place to have any money invested. Now, the background of silver is great because it's got two stories, really. One is the monetary metal, and when gold goes up because currencies are being debased, silver comes along with it. The other, it's an industrial metal that we're kind of running out of. Each year, industry uses more silver than mines produce, and the silver that's left over, that's been in inventory all along, is shrinking. And there's some question about whether the paper exchanges are going to see enough physical demand that it taps them out and they have to default. And that's the really timely part of the story here. Although there's another timely part also, and that is that Chinese trading is shutting down for a week because of a holiday. And that just leaves the paper markets where all the manipulation happens operating. So we could see a huge amount of volatility in the next week or two, but that barely matters from the point of view of stackers, the people who have just been buying a little more silver each month or whatever, because the long-term story is so great. So my advice for the next few weeks would be to enjoy the volatility from a safe distance. Don't be too wrapped up in it, because the underlying fundamentals are great. Just stick with your silver positions. Don't let a big drop on any one of these days shake you out, because any big drop that happens in the next week or two will be reversed out once everything goes back to normal.
Beyond price charts lies a tightening physical market. For years, industrial consumption of silver has exceeded annual mine production. The gap has been filled by shrinking inventories, but those reserves are steadily declining. Solar panels, electric vehicles, advanced electronics, and renewable infrastructure all require significant silver input. Meanwhile, new mining projects face regulatory hurdles and rising costs. This structural imbalance is raising questions about whether paper trading exchanges can continue meeting physical delivery demands. Should shortages intensify, price discovery could shift dramatically. Beneath the surface volatility, a deeper supply constraint is quietly reshaping silver's global landscape.
Silver is a long-term story, and it's just a very good story. So you just want to be riding that train, and you can do it gradually. People can call you up and buy a few silver coins every couple of weeks or every month or whatever, and they'll do just fine over time. And if you're an investor in the miners, the gold and silver miners, then you've got a really interesting month ahead of you right now, because the price of gold and silver are way up, which means the miners, especially the high quality miners who control their costs, are looking at massive increases in earnings and cash flow at least in the coming earnings cycle, and probably much longer further out than that. So the earnings reports that these miners are going to release in late February and early March are going to be great. And assuming there's no big trauma going on in the market at the time, it ought to have a positive impact on the mining stocks. So if you're dollar cost averaging or using lowball bids or whatever to get into the mining stocks, you've probably got a good month or two at least in which they put up positive surprises over and over again. And the people who are paying attention to earnings momentum and cash flow levels and things like that are very possibly going to be piling into this market. So we got lots of volatility in the physical market and really good earnings reports in the mining sector to make this a really exciting month going forward.
short-term turbulence remains part of silver's story. With major Asian markets periodically closing for holidays, trading activity can temporarily concentrate in Western futures exchanges, where speculative forces often dominate. This can amplify price swings in both directions. However, these fluctuations may distract from broader trends. Long-term investors, often called stackers, typically view volatility as background noise rather than a signal to exit. Historically, sharp pullbacks during strong bull phases have reversed once global liquidity and physical demand reassert influence. In this environment, patience may matter more than precision timing, particularly when structural fundamentals remain intact.
Your mention of the mining stocks reminds me that our last interview with Rick Rule just a couple weeks ago, he rather surprised our audience by saying that he was so much intrigued by the value opportunity he saw in the mining shares, because he said normally at this stage of a gold and silver precious metals bull market, you see a lot of capital pouring into those sectors, and you see the miners outperforming the metals themselves by multiples. And yet he said what he was seeing was almost the opposite, that the amount of money pouring into the metals wasn't buoying the miners as much as it normally would on a percentage basis. So he was actually reallocating some of his capital into what he considered a special value opportunity of the miners at this time, trying to be ahead of that rush that typically will come when the public suddenly wakes up and sees this cavalcade of higher than expected and higher than price would suggest, price to earnings growth and all that sort of thing, ratios. So good reminder on that. It also reminds us of this volatility that we just saw in the silver market was something that for the past year or so, claims had been made that the physical markets in the East, the Shanghai market, the Moscow and others, were starting to dominate because of the true underlying physical shortage that's looming, and that the paper futures derivative games that have been played for perhaps decades in the Western markets, notably the COMEX and the LBMA, were losing their ability to control and be the drivers, or at least the sole drivers, of price action on the exchanges. You'd see almost a daily, nightly cycle where things would get hammered down in the daytimes in the COMEX, and then they'd just claw their way right back up again on the overnight hours when the Asian markets were dominating. Your expectation of that mega trend in the big picture, first of all, and then later on you said, you gave us a caution that might be an interruption in that for the next week or so with the Chinese New Year.
While bullion captures headlines, mining companies may offer another dimension of opportunity. Rising gold and silver prices expand profit margins for efficient producers, particularly those with controlled operating costs. As earnings season approaches, stronger cash flow statements could surprise markets that have yet to fully reprice the sector. Historically, mining equities often outperform the metals during sustained bull markets. Yet recently, capital flows into miners have lagged behind bullion gains. Some seasoned investors see this divergence as a value window, an early positioning opportunity before broader institutional money recognizes improving earnings momentum and balance sheet strength.
Yeah, physical is finally, we've been talking about this for over a decade, right? Someday physical is going to start dominating, and then the price will go way up because of that. And then, that's playing out according to the script, except it took a lot longer than it should have. But what we're seeing in the physical market isn't just industrial demand. And industrial demand is a very big deal, solar panels and electric cars and power plants. They all need silver along with a lot of other critical minerals. But governments are getting into this now too. Russia, China, and India are buying a lot of metals, including silver. The U.S. just announced that it was going to set up a critical mineral stockpile, and silver is included on that list too. So not only do you have, Tesla and Google out there buying a lot of silver, but you've got the big governments of the world too. So the wind is absolutely at the back of silver right now, because you've got these big players who, in the case of governments, they can literally print money. And in the case of a lot of these big corporations, they can print something better than money, which is new high-powered shares of common stock. So, you've got a tremendous amount of potential demand out there on the physical side, and nowhere near enough physical metal to satisfy all the demand if everybody does what they say they're going to. Google, for instance, just announced, or Alphabet announced their revised capital spending for the year ahead, and it was way up. It was already high, and now it's up to like $185 billion or something like that.
For years, analysts debated whether physical demand would eventually outweigh futures market influence. Evidence now suggests that shift may be underway. Trading patterns increasingly reflect strong buying pressure from Eastern markets, including Shanghai and other commodity hubs. Instead of paper contracts dictating global pricing alone, physical acquisition appears to exert growing influence. Governments are also stepping in. Several nations have expanded strategic metal reserves, classifying silver as critical to national security. When sovereign buyers and industrial giants enter markets with limited price sensitivity, traditional pricing mechanisms can face unprecedented stress.
And a lot of that is going to go into AI data centers, which use varying amounts of silver. And you've got these new electric car batteries coming online a year or so from now that apparently are much better than today's batteries, and they use a lot of silver. So you got things like that out there in the market where governments are not price sensitive. They're buying because they need it as part of their national security policy. Companies that know they're going to need a lot of silver going forward, and they can't shut down their production lines because they run out, so they have to buy without a lot of price sensitivity. And these new technologies coming on board that use varying amounts of silver, but also can't just be shut down because silver isn't available or it's doing things that it shouldn't be doing. They all have to have silver. So if silver was just an industrial commodity, that part of the story would be good enough to make it a strong buy in the longer term. As Rick Rule said, sometimes the mining stocks will do better than the metals, and this might be one of those times. But if you're buying a few silver coins a month, there's no reason to stop that, no matter what the price goes to in the short run, because the longer term story is phenomenal. Oh, and then there's Elon Musk announcing that he's going to put data centers in space. Presumably that's going to use some silver along with a lot of other important metals and minerals too. So, wherever you look, you've got something going on that's both unprecedented and really positive for silver.
Silver's outlook extends beyond traditional investment narratives. Technology companies are dramatically increasing capital expenditures, particularly in artificial intelligence infrastructure and advanced data centers, both of which require conductive metals. Renewable energy expansion continues accelerating worldwide. Electric vehicle innovation, next-generation batteries, and even experimental space-based infrastructure projects all rely on silver's unmatched conductivity. At the same time, governments are building critical mineral stockpiles to secure supply chains. This convergence of monetary demand, industrial necessity, and strategic accumulation creates a rare alignment. In the long arc of market cycles, silver's evolving role may prove historically significant.